So let's get into what liens are. You kind of gave a high view of that. So Rachel, you want to take on to tell us, break a lien down. What is a lien? What does that mean? What are liens?
So, I mean, I guess to kind of go back to very rudimentary, but I mean, when a property tax is delinquent, county governments or local governments, depending upon the state, need to collect that property tax for budgets, correct? And so if someone's delinquent, the county's not getting that money to help their budget. And so once that's delinquent, then it can go to what's called a tax sale. And in a lien scenario, the buyer, the investor, is buying the delinquent amount and any fees and other things that come with that, and then gaining an interest rate. So the property owner, the homeowner, can pay that lien back, but there is an added interest rate. And that county is going to add an interest rate no matter what. It's a delinquency. It's like going delinquent on anything. They're always going,
right.
You have to pay a penalty, you have to pay a fee, and there are states that have interest rate and penalties. I mean, there's a lot of different scenarios. And that investors basically giving the county help in providing that money that they need for the budget, and giving the homeowner time to pay that back and earning the interest rate in between. And that's what the tax lien is basically the lien. There's that lien on the property during that time frame. And each state has different time, from 2 years, 1 year, 2 year, 3 years, depends on each state, that they have to repay that delinquency. And so they're taking that property tax plus the interest rate, and the investors earning the interest off of that.
Wow. So okay. And I'm going to play the devil's advocate in this. So do they own the property when they purchase the lien? So if I go and I buy the lien, it's like, oh, I got the property, I can go kick people out of their homes and...
Nope, not on a lien. Nope, not on a lien. That's definitely not the case.
Okay.
They're literally just buying the delinquent amount, and then they're earning that interest back. In some cases, they can earn the fees that were there too, and so it just really depends. But they're not. Most of the investors that are in that capacity are not interested in owning the home or kicking anyone out. They're there to earn the interest and move on, basically. So,
right.
And there's funding specific to that. So
it's a lien, right? It's like any other mortgage or mechanics lien, or there's a lot of different liens you can place on a property. If somebody places a mechanics lien on your property, doesn't mean that they have any ownership in your property, right? They're basically telling the county, you can't sell this property without satisfying this lien. And that's essentially what's happening, is that tax lien is placed on the property, and there's no transaction that can happen on that property unless that lien is satisfied. So there's no ownership change per se. It's just a pure lien-based investing strategy. It's very similar to mortgage. I refer to it regularly as a micro mortgage, because you're placing a lien on the property, but instead of it being $200,000 or $100,000, it's $1,500 or $2,000 is the lien on the property.
Right. Wow. Okay.